SpaceX shares are climbing despite a massive wave of insider stock becoming available for sale today. Timothy Horan, a tech analyst at Oppenheimer, sat down on CNBC to discuss whether this lockup expiration will trigger a collapse or a buying opportunity. You will learn why the company's explosive revenue growth and high short interest suggest the stock could be significantly undervalued for long-term investors. I'll show you the clip of Timothy Horan on CNBC uninterrupted, and after that I'll give you my own reaction breakdown to what he said.
SpaceX shares this morning up a little bit, adding to yesterday's gains of more than 6%. At the same time that was happening, hundreds of millions of shares were unlocked, giving insiders a chance to sell if they wanted to. And join us now, Timothy Horan, Oppenheimer tech analyst. Sometimes I think you can't value SpaceX, that it's too early. Other times I think that there are some really tangible, really positive underlying fundamentals that you can see in the numbers from time to time. And a lot of what we see now, Tim, is post-hot IPO action, which we've seen again and again with tech in the past, haven't we, the last couple of decades? This is the way it works.
That's the way it works. I mean, these things are valued, short term, it looks like they're expensive, but if you go out a couple of years, they look really, really cheap. Yes.
And you get lockups expiring after a really hot and a huge IPO with all the things baked into it, like the Elon Musk mystique and his success at everything that really he's ever touched. So that all goes into pricing this. So I guess you shouldn't be surprised when some people get a chance to sell, they're going to sell. Do you expect more of this? Technically, what do you expect to happen over the next 3 months with the insiders or the lockup expiration?
Well, today's an important event because a lot of people have been concerned about the unlocks, obviously. But I think a lot of people are prepared for it. The short interest is extremely high in the stock right now. The whole space sector has gotten crushed. I mean, most of my space stocks are down. They've been cut in half. A lot of people shorting them in anticipation of this unlock. So it's a very, very big deal. And I think as long as they're kind of hitting the numbers, I mean, he's talking about 100 million of annualized recurring revenue by the end of this year, which is just absolutely incredible. You're talking about revenues doubling between, now and then. You can see a path for 300 million in revenues a few years out, relatively easily on a relative basis. That he's going after some very, very large markets with massive improvement in products. And actually the stocks start to look really, really cheap, in many ways.
I think maybe if you don't follow it that closely, people probably thought it was a meme, not a meme stock, but it didn't have the underlying fund. But you got things like Starlink. You've got things that to actually help generate cash flow to invest in things like XAI and other parts of the business. That's the wrap on some of these companies that get the negative cash flow, is that they don't have enough money coming in for the money that's going out. SpaceX actually, in terms of its peers, it has revenue being generated already, which I don't think everyone realized.
No, absolutely. That 50 million revenue run rate basically as we speak right now. They're on track to grow the broadband business dramatically. They have 10 million satellites in space, but they're going to increase the space capacity for broadband basically 100-fold in the next 6-7 years. So they're basically close to 15 million broadband subs at this point. The point is they can support 100 million broadband subs very, very easily. And in places and use cases we've never seen before. And then many, many other businesses. Obviously, the biggest business for them now is going to be AI. They are the only vertically integrated AI company. We have a massive shortage of AI compute, and that's the big bet you're making on this company. They're going to add a massive amount of AI compute the next few years. But so even though they are growing revenue dramatically, it does take a lot of upfront cash to do so. They obviously have a goal to getting to $1 trillion in revenue. Elon thinks it could be 4 or 5 years from now. We think it's probably more like 7 or 8 years. But to hit $1 trillion in revenue, they are going to require like $400 billion in capital raises. And that's probably the biggest risk for the company. You need the market to hold up for them to be able to raise that type of money.
Just to get some more insight on the cash generating part of the business, Tim, when it comes to Starlink, I mean, does it need to be a true competitor to the wireless networks in order for it to, really fund the spending ambitions. I mean, there's some analysts on the street who think that they're not going to be able to, that the idea that they're going to be able to provide wireless at scale is far-fetched, that they need towers, they need to build out all these other sorts of infrastructure here on Earth in order to actually compete.
Well, first of all, we know broadband, they're going to be very disruptive. I mean, their costs can get down to $3 or $4 per sub over time. You know, in the United States, on broadband, we're spending $70, $80 per month. And secondly, they're going to get into the direct-to-device, whatever happens, so that from your smartphone, you're going to be able to communicate anywhere in the world through a satellite link. And you're not going to have to do anything to your smartphone. It's just going to work. Now, that the direct-to-device is not going to have a lot of capacity in urban areas. It's not going to be great for in-building penetration. So if they truly want to get into the mobile market, they are going to have to figure out another strategy. And I think it is possible. I mean, I do believe they would like to get an MVNO agreement, and they are trying to play one of the carriers off on the other to try to get Prisoner's Dilemma going, to try to get an MVNO agreement where they would resell their wireless networks and add that to their broadband and direct-to-device. But over time, we firmly believe they're going to build out very, very small cell sites and use your existing antennas on your house to basically build a cell site with a small radius, but around your neighborhood. But if you can add 1 million of these, you would actually have a massive amount of capacity. The average carrier in the United States has about 100,000 cell sites. They are much larger cell sites. They are on towers. But these small cell sites would go a long way to adding capacity. And they could use the cell sites or the existing towers to build out a thin layer of very, very good coverage. So they have a lot of options. In the United States, our cell phone pricing is very, very high, people paying $60 a month. If SpaceX can get the cost down, which we think they can, we do expect them to enter the market to be disruptive.
So what price would you say that widows and orphans, everybody should be mortgaging the house to buy? What would you say would be the absolute cheapest that this would sell for? Could it go under 100?
I mean, it's hard to know where the stock's going to trade short term, obviously, but you got to be a little careful with widows and orphans because in a lot of ways, this still is very much venture capital, right? He's totally transformed the company in the last 8-9 months into an AI company. AI is going to be 70-80% of their revenues, despite what we've just said about space and about the communications industry. Then they have to raise a massive amount of capital. We are big believers that it's going to be worth a few trillion in a couple of years. Right now, so we think the stock can double here in the next 2-3 years, and longer term, it's going to be a very, very valuable company as long as it keeps innovating. But I just believe it's going to be very, very volatile.
The host kicked off the conversation by focusing on the immediate technical pressure, pointing out that while SpaceX shares had recently logged gains of over 6%, hundreds of millions of shares were suddenly unlocking, giving insiders a chance to sell. The host asked Horan whether investors should brace for heavy selling pressure over the next 3 months. Horan acknowledged the unlock anxiety but argued that the market is prepared. He pointed out that short interest is exceptionally high right now, especially as the broader space sector has been crushed, with many peer stocks cut in half. Short sellers have aggressively piled in ahead of this unlock, but Horan believes they are underestimating the company's operational momentum. He pointed out that SpaceX is on track to hit $100 million of annualized recurring revenue by the end of this year, representing a near doubling of revenues. My read is that this high short interest actually sets up a coiled spring. If SpaceX hits these milestones, shorts will be forced to cover, turning a technical sell-off into an upward catalyst. This fundamental strength prompted the host to steer the conversation toward how the company is generating this cash. Small favor, hit like and subscribe to the channel. Now back to it. The host pushed back on the idea that SpaceX is just a speculative negative cash flow tech play, noting that unlike its peers, the company has tangible assets like Starlink that generate real cash to fund advanced projects. Horan agreed, noting that the company is currently operating at a $50 million revenue run rate. He explained that while they currently have 10 million satellites in space, SpaceX plans to increase its broadband space capacity 100-fold over the next 6 to 7 years to support 100 million subscribers. Yet the real bombshell in Horan's analysis was his claim that SpaceX's future isn't actually about satellite broadband, but artificial intelligence. He asserted that over the next few years, AI will become the company's dominant business, making SpaceX the only vertically integrated AI company positioned to solve the global compute shortage. My take here is that while this AI narrative is compelling, it represents a massive pivot. Building terrestrial AI data centers requires a completely different capital profile and infrastructure network than launching satellites. But if Musk can successfully link Starlink's global connectivity with proprietary AI compute, the addressable market expands exponentially. This massive ambition led the host to ask how they could fund these goals. The host pressed Horan on whether Starlink needs to compete with terrestrial fiber networks to win the global broadband war. Horan's answer was clear. Starlink doesn't need to replace fiber in major cities because its real growth is happening where fiber physically cannot go. He pointed out that maritime, aviation, and government defense contracts, specifically through their Starshield military division, are high-margin segments that terrestrial telecom giants simply have no way of serving. In Horan's view, these enterprise and military clients are virtually price-insensitive, giving Starlink a massive cash flow moat that is already self-sustaining. I think Horan is spot on here. While retail satellite internet has a natural customer ceiling due to physical bandwidth limits in high-density areas, the enterprise and defense sectors represent a massive untapped goldmine. The cash generated from these contracts is what feeds the launch side of the business, creating a closed-loop financial ecosystem that no competitor can match. This brings us to the core of the investment thesis. How do you actually double your money on a company already valued at roughly $180 billion? Horan believes the market is still pricing SpaceX primarily as a rocket launch provider, completely ignoring the compound value of Starlink's global network and the upcoming AI compute layer. If SpaceX successfully scales its capacity 100-fold as planned and begins routing localized AI workloads through space-based servers, Horan estimates the valuation could easily cross the $400 billion mark within the next 5 to 7 years. It's a compelling case, but we have to remain realistic about the execution risk. Building out a space-based AI processing network means solving massive thermal and power constraints that don't exist in terrestrial data centers. However, if any engineering team has proven they can defy the skeptics, it is SpaceX. For long-term investors, this current unlock volatility might just be the best entry point we get before the market finally wakes up to the true scale of Musk's orbital economy. Ultimately, the question isn't whether the technology works, but whether the market is ready to value a space company as the backbone of our future digital infrastructure. I am keeping a close eye on their next few launches to see if the Starshield revenue growth holds its current trajectory. If the numbers continue to support this scale, the leap from launch provider to global utility is far closer than most analysts are willing to admit. Appreciate you watching. Do not forget to like the video and subscribe to the channel while you are here. See you in the next one.